Welcome to Talk Tickers. Today, we're digging into Nucor's fourth quarter earnings call from January 27, 2026, and trying to make sense of, well, a very interesting reaction from the market.
So let's set the scene. You've got Nucor stock, and it's been on an absolute tear, rallying hard to hit a 52-week high right before they report earnings. Then, the numbers come out, and the stock sells off. So the big question is, what gives? Was the market right to get spooked, or was this a classic overreaction? Let's unpack the numbers and see how they stack up against what management had to say.
Okay, so let's get right into it. The trouble really started with the headline numbers. And yeah, they definitely gave the market a reason to hit the pause button.
First off, the miss on adjusted earnings per share. Nucor came in at $1.73. Now, the street was looking for $1.91. That's a full 18 cents below expectations. And look, a 9% miss, that's for sure going to raise some eyebrows.
And it didn't stop there. On top of that earnings miss, they also came up short on the top line, the revenue. They landed at about $7.7 billion, which was about $180 million shy of the forecast. You know, when you miss on both the top and the bottom line, that's always a tough story to sell. So there you have it. Plain and simple. Nucor came in light on the two metrics Wall Street obsesses over, adjusted EPS and revenue. This is exactly what sparked that initial negative knee-jerk reaction from traders.
But, and this is a big but, here's where the story takes a fascinating twist. Despite those ugly headline misses, if you actually listen to the earnings call, management sounded anything but worried. In fact, they started painting a very different, much brighter picture for 2026.
The CEO, Leon Topalian, he basically glossed over the past quarter. Instead, he pivoted right to the future. And this quote really says it all. A 40%, let me repeat that, a 40% year-over-year increase in their steel mill backlogs? Wow, that's a massive signal that future demand is looking incredibly strong.
They also got everyone excited about a whole slate of huge projects that are finally coming online. Think about it. These facilities were just costing them a ton of money during construction, but now they're about to start making them money. These aren't just lines on a blueprint. These are real facilities expected to add to the bottom line this year.
And this, right here, is where you really see the huge disconnect. The market is selling off based on Q4's results, but management's formal official guidance for the next quarter is for earnings to actually increase. They're pointing to higher volumes and better prices. It's a completely different story.
So you had these two totally opposite narratives. How did the market handle it? Well, it did what it often does. It sold first and decided to figure out the details later.
The immediate reaction was sharp and clear. In after-hours trading, right after the news hit, shares dropped about 3.4%. In those first few moments, the bad news from the past quarter completely drowned out any optimism about the future.
Now, the trading volume tells its own fascinating story. On the day of the call, volume just exploded to more than 1.6 times the daily average. This wasn't just a few nervous retail traders. Oh no. This signals that the big fish, the institutions, were making some major moves and repositioning their funds.
All of this sets up the central debate for anyone looking at Nucor right now. Whose version of reality do you buy? The market's fear about the recent miss, or management's optimism about what's coming next? It's a classic bull versus bear showdown.
Okay, let's break it down. The bulls, they're all about the future. They see those massive backlogs, they hear the positive guidance, they see new projects coming online, and they're getting excited. The bears, on the other hand, are glued to the rearview mirror. They're hung up on the Q4 miss, and they're worried that rising costs are going to keep squeezing profits. Plus, they'll be quick to point out that the stock was already at a 52-week high, so maybe it was just priced for perfection.
So, where does that leave us? Here at Talk Tickers, we're already looking ahead to the next earnings call. So here's our take on what to watch for.
First, let's talk about the results. We actually predict the company is going to deliver on its Q1 guidance. That backlog strength and pricing power they were talking about, it sounds credible, and we expect that to translate directly into the numbers next quarter.
But as for the stock price, well, we think it might just tread water for a bit. After a miss like this, investors are often in show-me mode. The market is going to want to see tangible proof in the next report that those cost pressures from Q4 were just a temporary headache, not the start of a new, nasty trend.
So putting it all together, we're initiating coverage with a market perform rating. Look, the powerful long-term growth story here is compelling, no doubt about it.
But that optimism has to be balanced by the near-term risk after a notable miss. It's a classic tug of war between a tough quarter and a bright outlook.
And of course, as always, please remember this is not financial advice.